Guys, how we doing? I'm Ryan Mack. Welcome back to Trading Guys. Today we are going to run through the fundamentals. Quick points to note. So, normally I do these on the weekends, right? I do them on Saturdays or Sundays. From now on, I'm predominantly going to be doing them on Mondays. The reason is, as you know, if you watch my old videos, I have just opened up a brand new office and studio over there. I've just bought a fantastic big 65-inch interactive Samsung TV, which is phenomenal for me to be able to stand up in front of the screen and physically talk stuff through, as opposed to just doing this, right? It's really, really professional looking, looks fantastic. So I'm going to be doing that. The reason why I'm not doing it at the weekend is because it's over in an office building and it's all closed up at the weekend, and my camera crew and my editor guys are not there at weekends, right? They're only there Monday to Friday. So I'm going to start pumping these videos out on Monday. No big deal. That's fine. The odd time, if something happens, if there's a public holiday and stuff and I can't get over there, I will obviously come back and jump back and do them as normal on here, okay? But you are going to really enjoy my videos from now on over in the office. On top of doing these weekly fundamental reviews, I am going to be pumping out mountains upon mountains of free trading educational content, right? Tons of it. I'm going to be doing reels, I'm going to be doing full content stuff. I'll do lives. So this is a very important thing, guys. If you jump across to the Trading Guys YouTube video, it's called The Trading Guys YouTube. When you hit subscribe, it's very important. You will see a little bell next to it, right? It's very important that you hit that little bell. What that's for is notifications, and you want to select all. I'm not going to annoy you with it. The reason why I say this is when I'm over doing these live lessons over in the office, if I'm talking about something and I come across a trade and I'm like, fuck, I could take a sell there right now, or I could take a buy, what I'm going to do is I'm going to start doing live trading. I always do live trading, but I do it in my Discord group, right? So you guys can't see it if you're not in my Discord group. What I'm going to do now is I'm also going to be doing live trading on YouTube. So the minute I hit live, if you haven't hit that bell, you're not going to get the notification that I'm doing a live trade, and then you're maybe going to see it 2 days later and be like, fucking hell, I wish I saw that. Because, you know, you can ask me questions on the trade. As I'm talking about it on the screen, you can comment, Ryan, why did you put your stop loss there? Ryan, how did you know that that's going to be your take profit? Do you know what I mean? You can ask all these questions, which beginners always have. How did you calculate your risk? You know, blah, blah, blah. And then also, if you want to copy my trade and make money copying the trade on your own personal account, you can do so, all right? Or even if you're just a real beginner and you're on a demo account, you can at least practice my strategy. You can copy all my trades and practice my strategy on your demo account, okay? So I'm going to be doing that. So very important, hit subscribe, but also hit the alarm bell so that you will be alerted. You'll get the notification when I do a live trading. Okay, guys, so let's crack on. You know these things are quite long-winded for fundamentals. If you are someone who watches my videos all the time, you will know that what we do is we write trades, strong, weak, and neutral. So if you're a beginner, maybe the first time you've seen my video, why do we do that? That's to show us a strong economy, i.e. a strong currency, because if an economy is strong, that means the currency is strong, right? So strong currency, weak currency, and neutral. As I always say in my videos, you know, logically, you'll be like, well, why isn't it strong, neutral, and weak? The reason for that is what we do is, when we go through the fundamental data, we find economies which are strong, economies which are weak, and then neutral. Excuse me, what we're going to do is, we're going to ignore the ones in neutral, so we just put a cross through them, and we will then pair up a strong economy with a weak economy. And that, my friends, is how you know what to trade. How many of you newbies have been sitting there looking at your screen, you've got 20, 30 fucking pairs, right? Or you've had the other one where it's like, oh, just choose one pair to trade. You know, if you can trade, you can fucking trade. You don't have to choose one or two pairs, right? If you can trade one pair and you know fundamentals, you can trade anything, because by knowing fundamentals, you understand why a particular currency is moving in one way or the other, right? If it's going strong, if it's going weak, and blah, blah, blah. All right, it's actually, fundamentals takes a long time to kind of get your hang around. It takes about 4 to 6 weeks. It's not really a long time, actually. It takes about 4 to 6 weeks as long as you put the work in every week, okay? But most people are fucking lazy, and most people in the trading industry just want get rich quick. They've seen stupid fucking videos of people sitting there with a stack of $100 bills. fucking giving it all this shit, you know, on Instagram. It's fucking gay. It's not real trading. It's fucking gay. Real trading is, if you are a day trader or a swing trader or a position trader, I would highly recommend that you learn fundamentals, because then you're going to have a reason. Why the fuck am I taking this trade? You have an actual reason for it, you know. It's not like you don't just draw a fucking triangle on your page, you know, oh, if a candle breaks the triangle that I've just drawn, that's not a reason to fucking trade. It could be a reason for a particular entry, because that's a technical analysis, right? I'm not hating on technical analysis. I'm just saying technical analysis alone is not a reason to enter a trade. It could be your entry signal, yes, but it's not a reason, okay? What else we got? Let me just think. I think that's us for now. Let's crack on. Oh, sorry. What I was going to say is, if you are a scalp trader, then personally, I wouldn't waste my time learning fundamentals, because you don't fucking need it. You're in and out in 2 minutes. You know, you don't need it. You would, if I was you and you're a scalp trader, I would focus more on price action. Okay. One of my good friends, the guy who taught me fundamentals back in the day, Dan Emerson, he would still say, if you're a scalper, learn fundamentals. But my opinion is, nah, I wouldn't put in the amount of work that's required to learn fundamentals just to scalp, okay? If you're a day trader, yes. Swing or position trader, absolutely fucking yes, okay? So, let's move on, guys. We have got Trading View here. For the other news, I use Trading Economics. If I click on it now. Oh, there we go. So I normally use this, okay? Trading Economics. This gives you far more data. It's far more reliable. The numbers come out far, far quicker. It's called Trading Economics, and I've said it 3 times, but you know, sometimes people are like, fuck, what did they say? And you don't want to rewind it again, right? So Trading Economics, this is the one I use. The reason why I do my reviews on Forex Factory and not on this is because, look, if I select countries, look at that. It's a fucking massive pain in the dick trying to unselect all of these to look at one country and then be like, oh, where is it? And you know, run around your fucking page trying to find it. However, if I use Forex Factory, look, it's very, very simple to select the countries that I want, right? So that's why I do it, guys. Now, moving on. As you know, if you watch my channel often, I do each currency pair individually, except from AUD, China, and NZD, okay? And that's because they're all very closely correlated. If China, NZD and AUD are what's called positive correlation, okay? If China does well, AUD will do well. If China does shit, AUD will do shit, okay? They're positive correlation. AUD and USD are what's called negative correlation, okay? If the USD is really strong and doing well, you will find that AUD is doing shit. If the AUD is doing well, the USD will potentially be doing shit, okay? That is called negative correlation. They move opposite from each other, okay? So that's last week. That's what I want to see. What's the dates? 13th, okay. So last week, I mean, there won't be much change, I don't think, but let's have a look. Job advertisements, 0.4. I mean, I don't. What the fuck was that? I don't really. Yeah, nothing there. NZ Business Confidence, nothing. Westpac, NAB, no, shit. Official cash rate. So, you'll see here, NZD have lowered the central bank rate, okay? I'll cover this briefly. So, what is this here? What is the official fucking cash rate? Right, well, it's this right here. Look at this corner here. See what it says, central bank rates? Okay, some people will call it rate. What is that noise? Sorry, maids are all kicking off in the background. What was I going to say? So this here, right? So see when it says there, official cash rate. Okay, that means they've lowered. You'll see it says they've lowered it by 25 BP. It means base points. Okay, they've dropped it by 0.25%. Okay, now this is also, you see here, central bank rates. It's also basically the rate of inflation, right? People talk about inflation. So although central banks they've got a million fucking things that they actually do, okay? But the one that you and I care about, and getting straight to the point, is that their job for us as traders is they want to try and keep inflation, i.e. central bank rates, at around minimum 2%. They want to get it down to 2%, right? Once it gets to 2%, they want to then start bringing it back up, and they want to then get it back down to 2%. Okay, 2% is a really good amount to keep an economy really nice and flowing. Okay, and what you'll find is going from 2% up to, let's say, 4.75 or 5%, that will take a prolonged amount of time, maybe 5 to 8 years. But coming back down to get it back down to 2%, they always do that very quickly within 1 to 2 years, and you can actually see that in the graphs here. Let's have a look. I'll show you, because I'm a great believer. A picture paints 1,000 words. Okay, where's the fucking graph? So look, steady growth, steady growth, steady growth, plateau, crash, 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 steady growth, steady growth, steady growth, plateau, crash, crash. Wee bit of a plateau, boom, right? There we go again. Look, steady growth, steady growth, steady growth, plateau, boom, 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 and then it goes back up. Same again here. If I can't pull it any further, but you get the point, right? So you can actually see it there. Okay. What the hell is that now? Oh, there we go. Okay. So there is the central bank rates. Now, when there are rate cuts, typically speaking, they shouldn't cut rates if all the numbers are coming in strong, right? Because if you cut inflation rates when everything else is going up, CPI, PPI is all going up, you will create massive fucking what's it called? You'll create like runaway inflation, if you like, right? Inflation will just fucking run away from you, and it's like, fuck, how do we get it back down? You'll cause a fucking major incident in the markets, okay? So they tend to cut the deflation. They tend to cut rates when numbers are really shit and coming down, okay? Now, that's not 100% of the time, because back in November, December, American numbers were still coming in good, and the Fed were still cutting rates, right, which was seen as a little bit risky. So you have to remember, with trading, nothing is 100% black and white, but it is, general, 80, 90% of the time, this is the way it should be, okay? So you have to bear that in mind. You have to be kind of fluid, right, when it comes to trading. Nothing's ever black and white, because there's so many factors involved, that's why, right? So anyway, official cash rate, they have dropped that by 25 basis points. It's generally seen as giving a negative or bearish move on the market. However, you might notice that sometimes a rate cut has came into effect like this, and you'll be like, the market hasn't fucking moved. Or maybe the market's even went up. Why is that? Well, it's because, if you look here, it was already forecast. So look, they already forecasted, i.e. they anticipated it, there was going to be a rate cut, and there was a rate cut, and the rate cut came in exactly as they forecasted it, right? So what does that mean? That means if there was a move previously, they've already priced it in. So because they've already priced it in, they've either bought in or sold, 2 weeks ago or last month, there'll be very little reaction now, okay? And that's why it is. It means it's already been priced in because it was already anticipated, okay? Inflation expectations 4.2, 3.6, so that's positive. CPI bearish. Well, it's better than before, right? But it's still -1, but it is getting better actually, so we need to bear that in mind. PPI year on year is getting worse. Excuse me, it's getting worse there. That's not good. In business manufacturing, that is actually good. That's bullish. It's 53.2. Yes, it's less than before, but don't see anything above 50 is bullish. Anything below 50 is bearish, okay? Please remember that. I know I say it in every video, but you never know who's watching my videos for the first time. And even if you've watched my videos 100 fucking times, it's good for me to keep saying it so I can keep fucking drilling it into you, right? It's like when I was in the army, they keep telling you the same shit over and over again so that it becomes second nature, alright? Same as this. So don't look at that and see that it's 54 down to 53. Oh, that's bad. It's not bad. It's actually very fucking good. Things are slowing down, yes, but as long as that remains above 50, it's still bullish, okay? However, it's NZD. The NZD is fucking dog shit, okay? So moving on to see what we've got coming up this week. Any news that we're looking to see? New loans, we want to see that. GDP, yep. Industrial production, yep. Retail sales, yep. We want to see these. CPI, New Zealand, we want to see this. Unemployment, employment and unemployment for us. So yeah, we've got a fair bit of news next week that we want to see. So I'm keeping these pretty much where they are, guys. I'm keeping NZD in week, because it's overall, right? I know I had one bit of good news there, but overall, the economy's shit. And I'm keeping AUD in neutral for now, okay, until I see some good numbers. Obviously, China, we don't trade China, so we just fucking bin that off. Moving on. And it will go much faster now that I'm only doing one currency pair at a time, alright? Canada, let's have a look last week. Decent numbers. Let's have a look at the week before, just to get a quick... Yeah, shit. Bearish, 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 bearish. Yeah, pretty fucking poor. It is still bullish, but look, it's taking a massive hit. 55 down to 51, so it is still bullish. You have to bear that in mind, okay? However, it's not good. Building permits, that's bullish because it's went from -4 to that. But I mean, for me, what did I have for Canada last week? Neutral, yeah. I'm keeping it in neutral, guys. I'm not moving it. And remember, like I say, you don't, when you get good news or bad news, you don't just chop and change it from week to week, because we're talking about the bigger picture right now. A good question that's kind of came into my own mind there. So what happens if you had loads of bad news last week, right? But this week you had tons of fucking good news. Well, in the short term, you know, on the daily charts, maybe the 15-minute, 30-minute, when those good numbers come in, yes, you will see those, you know, you will see, oh God, Canadian dollar strong, you know, for example, if it comes in that way. But you have to remember, that's just the kind of intraday stuff. You know, I'm a swing trader. I like to enter a trade now and hold it for 8 fucking weeks if I can, you know, if the opportunity presents itself. So that's the way I like to look at the bigger picture. I don't just change my mind, you know, every single week when good news, bad news, good news, bad news, and kind of fucking chase my tail round in circles. You know what I mean? So yes, if numbers come in good, you may see strength, you know, that particular day, or maybe even that particular week. But overall, I would be looking at, right, overall, the economy's fucking shit. I'll be looking for it to hit here, and I'll be looking to take the sell. Do you know what I mean? So that's the kind of the differences in it. Canada, I'm keeping in neutral. If we get any news that we want to see next week, yes, we do. Loads of big news next week for Canada. We've got CPI, trimmed, common core, manufacturing sales, overnight rate. They're looking at keeping rates there at 2.75, which is fine. Now, look, what are central bank rates? Let me just cover it quickly, right? So, these central bank rates, what do they actually do and how do they affect the market? Okay, so these rates are, you would know as inflation, right? Now, if you look here, USD and GBP, they're at 4.5, okay? Now, if you live in any of these countries, it's going to feel pretty fucking shit for you, because when you live there with high central bank rates like this, what does it mean? It means everything for you is expensive. Putting petrol in your car is expensive. Buying groceries is fucking expensive. Taking your missus out for a meal and going for a couple of drinks at night is fucking expensive. You know, like, everything's expensive. So you living in these places with high central bank rates, like high inflation rates, it's not good, right? It feels really freaking expensive, okay? However, so for the individual, it's not good, okay? However, for the country, it's very fucking good, okay? Now, why? Because these are interest rates. And it's no different. If you go to a bank, right, you go to HSBC and you're like, look, I've got 20 grand here, I want to put that into an account with your bank, how much will you give me? And they're like, oh, we'll give you 2.7% a year. And you're like, oh, okay, that's pretty shit. You then go to TSB, right, and you're like, look, I've got 20 grand here, I want to put it with your bank, how much interest you're going to give me per year? And they're like, oh, we'll give you 4.5% per year. You're like, oh, happy fucking days. HSBC were only going to give me 2.7. If you give me 2.5, I'll come with you, i.e., I'll invest my money in your bank, right? It's no different from this here, right? The countries are just like the countries are just like big massive companies, essentially, right? So if I'm a massive investor and I have, you know, $200 million or $2 billion, whatever, and I want to make money on that, if I look at these central bank rates, these tell me how much money I'll make. So if I put $2 billion into the Japanese economy, if I buy Japanese bonds, right, I invest in the Japanese economy by buying their bonds, I know that I'm going to make 0.5% per year, right? So why would I do that? That's fucking shit. However, if I take that same $2 billion and I bang it into GBP, I know the British economy is going to give me 4.5% return every fucking year. which one am I going to choose? You're going to put your money in fucking pound. You're going to invest in the British economy because they're going to give you a fuckload more percentage than the Japanese yen. You understand? So that's why it's good. That's why interest rates are good, because it's more inviting for outside investors. Now, how do they invest? They buy bonds. That's how you invest in a country. So, how does the bond market and interest rates affect the fucking currency market when you want to trade Forex, right? It's a good question. I'm going to tell you the answer. So, when a big investor, or any investor, wants to invest in a country, i.e. like this, they must purchase bonds, right? And to purchase bonds, you must purchase them in the currency of the country in which you want to invest in. So if I've got $2 billion and I want to invest in fucking pound sterling, buy bonds, I want to buy $2 billion worth of bonds in the British economy, I need to convert that to pound sterling. Then I need to use that pound sterling to go and buy the fucking bonds, right? So what happens is when people do that and loads of investors come in, it creates a huge demand. All these people trying to convert to pounds to buy bonds creates a huge demand for pound sterling, and then it gives the pound sterling this massive increase and really strong movement, okay? So that's how it all works in this big fucking financial circle of life, okay? I hope I explained that simply enough. You know, it is pretty easy. A lot of this stuff is fucking common sense, guys. I swear to God. Also, with Canadian dollar, remember, Canada is heavily tied to oil. So if oil's doing really well, then the Canadian dollar will also do really well. If oil is doing shit, the Canadian dollar will also do really shit. So there's a little golden nugget for you as well, okay? Moving on, I don't even know why I fucking bother looking at this. CHF for me is always neutral, okay? Always. Now, there are times where it's strong. If you look at last week, the last 2-3 weeks, it was strong. However, it's never ever got anything to do with all this bullshit, right? This type of data never changes a Swiss franc, okay? I'm going to stop fucking looking at it because it's pointless. The Swiss franc changes, becomes strong, becomes weak when the market sentiment changes, okay? I risk on sentiment or risk off sentiment. Risk on sentiment very simply means markets are great, everyone's willing to take risk, happy fucking days, let's go, everyone's going nuts. So when markets are risk on, Swiss franc is quite weak because nobody can really be bothered putting their money there because like, yeah, I'm not going to make any fucking money there, that shit, right? They'll put it into pound, euro, USD, all this kind of stuff, right? Now, when it comes to risk off, that means markets are fucked. Everybody's terrified, like they are right now. You know, Trump's tariffs, fuck, what's going to happen here, what's going to happen there? Everyone's scared. So when people are scared, they're not willing to take risk, which means risk off, okay? They're not willing to take risk as risk off sentiment. Now, markets are 98% of the time risk on. It's only when something happens like geopolitical war, tariff fucking wars, presidential election, when there's uncertainty in the markets, okay? Markets will become risk off for a short period of time. 1 week, 2 weeks, 3 weeks, whatever, okay? It's never for a very long period of time. However, when markets are risk off, you will see people are lifting their money out of things like pound, USD, euro, and they will put them into safe haven currencies, i.e. currencies which are safe. They're not, they're not risky, which is NZD, Japanese yen, Swiss franc, and other assets like gold and silver. Okay, you will see. That's why you'll see this thing people will say, it's total bullshit. Oh, when USD is strong, gold is weak. When gold is strong, USD is weak. It's total fucking bullshit. It's to do with sentiment. If that was true, right, then why, if you look over the last year, why is USD been going like that, and why has gold been going like that? I'll tell you why, because that's fucking bullshit. It's not just because, it's nothing to do with USD being strong, which makes gold weak, or vice versa. It's the risk on sentiment. So yes, you will get periods of time where you look at the market and USD is going like that and fucking gold is going like that. And you will have other times where USD is going like this and gold is fucking flying. It's got nothing to do with USD being strong, which makes gold weak, or vice versa. It's to do with the sentiment of the market. If we are in a risk-off sentiment, like Russia kicking off with Ukraine, everyone's like, fuck, is America going to get involved here? That's going to be a shitstorm. Everyone moves their money out of USD and bangs it into fucking gold because they're all fucking terrified. That's why you get gold flying and USD melting, okay? So it's to do with this market sentiment. It's got nothing to do with if USD is weak or strong, okay? Many people get that wrong. And if you think I'm lying, look at the fucking charts, and you'll see gold and USD are both going up at the same time, and both coming down at the same time. Apart from the risk on event times. All right. What is this? Euro. Yeah, Euro's pretty fucked, isn't it? Look at that. Blech. Bearish. This one here, I could have very easily said bearish there, but it's not bearish, it's bullish. Look, previously it was 16.2, now it's 17.7. So that's up, that's an increase, right? So that's bullish. So don't just look at this and see that it's red and automatically assume, oh, that must mean bearish. It's not bearish, guys. So the reason why it's red is because, look, they forecast it to come in at 18.48, right? But it came in less than they anticipated, okay? It came in less than forecasted, so that's why it's red. However, if you look at the previous, which is the actual figure, and this is the actual figure, so it was previously 16.2, and it has increased to 17.7, so that's very fucking good. That's pretty bullish, okay? So bearish, bullish, bearish. Again, look, that's bullish because it was previously at 0 and it's 0.3. It's only red because they thought it would be 0.5 and it's come in less than expected. So that's actually bullish. Bearish. Bearish. Bearish and neutral. Okay, so German trade balance. Sometimes it's called trade balance, sometimes it's called balance of trade, depending on which currency. It's all the same stuff, right? Anyway, whatever it says, trade balance or balance of trades, all that is a country's import and export, okay? So you can see here there's no minus. Like up here there's a minus, right? See that beside the one there's a little minus sign. So here there's no minus, which means that's not minus 17 billion. It's surplus 17 billion. So you either get a surplus or a deficit, okay? If it's a surplus, like it is right now, that means that this country, or the euro, which is an entity, right, because there's many countries, this entity is exporting far more than it's importing. Sorry, so it's selling more stuff than it's buying, which means it's making more money. If you're selling more than what you're buying, you're going to make more money, right? So there's a surplus. If you come across a country or whatever, or a currency pair which is has a minus here, that means it's at a deficit, and all that means is a country is importing tons of goods and it's not exporting a lot. So basically, in layman's terms, it's spending a lot of money buying a load of shit, the same as you do every fucking payday, and then you're not bringing in any more money. You know what I mean? Because everyone's fucking skint a week after payday, right? It's the same reason on this, just a bigger scale. Yeah, euro for me is still weak, so I don't really think anything's changed since last week, guys. News we want to see. When it comes to euro, we really care about France and Germany. If it's like Spain and Italy, we don't really give a shit because they don't really have enough, size, volume to really sway the markets. But France and Germany do. CPI, I don't know why that's yellow. That's the main fucking thing, CPI year on year, that should be fucking bright red. But yeah, okay, we've got CPI next week for euro. I'm not really, anticipating good numbers, but at least we've got it. Pound, right? We've only got pound, yen, and USD to do, guys, and that's us finished. Okay. I hope this has been informative for you. But like I said, you're going to really enjoy my next videos doing it from the studio, because it's a really fucking nice studio and it's a really good TV setup I have for you. Some guy keeps putting in the comments, sound quality very low or very shit. It's not, mate. I've listened to it in 5 different fucking platforms. There is nothing wrong with this sound quality. You need to buy new earphones, or you need to get new fucking speakers, or turn your volume up. But I can promise you the sound quality is not coming from my end. I've had it on my TV, my phone, my iPad, my missus's phone. It's all fucking good to go, mate. Halifax, let's have a look. Bearish. No, I don't care. Bearish. Bullish. Bullish. Bearish. See, look, good trade balance. Good trade balance. Look, it's at a deficit. So the UK is importing more than it's exporting. Now, you'd kind of anticipate that, because we're not a manufacturing country, we're a services country. So that if we're a manufacturing country, you'd think that we'd be then pumping out more stuff, right? We would be exporting more than we import. So it kind of makes sense a little bit for the UK to be at a deficit here, okay? Not that it's good, but it makes sense. Index of services, bullish, bullish, bullish. That's actually quite decent for the pound, you know. What have we got? Like, what did we have last week? Let's have a look. Bullish, bearish, 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 bearish. Yeah, pretty bearish, bullish, bearish. Yeah, bearish. Yeah, pretty shit numbers. This week we're okay. Bearish, bearish, bullish, bullish. But it's nothing. It's nothing that's really going to change the markets. That's the thing. These are good numbers. But they're nothing. It's not like CPR, PPI, right? We really want to see numbers on CPI and PPI, so nothing that we really care about to change where we've ranked it. Claimant count change, we want to see that, yes. Retail sales monitor, yes. So why we care about that? If retail sales are up, means people are spending more money. If they're spending more money, it means they're stimulating the economy, so it's good. Average earnings, we want to see that. They are forecasting it to be decreased, which is not good. That's very negative. Unemployment rate potentially 4.4 again. Not good. So average earnings, right? When it comes to fundamentals, guys, I swear to God, I know I keep saying it, it's fucking common sense when you sit down and think about it. So you might look at that and go, average earnings index, 3 months to year. Oh man, what does that mean? You might start sweating thinking about, you know, some university type terms. It's actually very fucking simple. Average earnings, that means how much are people earning on average? Is it going up? Or is it going fucking down? If it's going up, that's a good thing. Why? Because if you're earning more, it means people are earning more money, right? And if you're earning more money at your job, what are you going to do at the end of the month? Are you going to say, oh, we've got fucking an extra 500 quid here, let's save it? Or are you going to say, we've got an extra 500 quid here, let's blow it and go and buy a load of shit that we don't need? You're going to go and buy a load of shit that you don't need, right? And you're going to stimulate the economy. If your average earnings are down, that's not good, because that means you're not earning as much money as you were previously, and things are going to be tight, everything's expensive, you've got high interest rates here. So this is going to be the type of situation where if this keeps going down, it's not good. People are going to be paying a lot for their electricity bills, petrol, groceries, blah, blah, blah. And this is the kind of period of time where you're fucking skint. And if you're skint and you're earning less money at your job, what are you not going to be doing? You're not going to be out fucking restaurants. You're not going to be fucking taking your missus to the bowling or the cinema and this, that, the other, right? You're not going to be out buying new clothes and all this kind of stuff, right? So you're not going to be stimulating the economy, which is negative. It's bearish, okay? So that's why we care about average earnings. Unemployment rate, of course, we care about that. The higher that is, it's not good, because the more people that are unemployed means what? It's not just about not having a job. You have to remember, most people in the Western world, and I used to live like this as well, most of us live fucking paycheck to paycheck. Most of us, if we look at our fucking bank accounts, we would have about fucking, a week after we got paid, we'd have about fucking £5.50 left in our accounts. You know what I mean? Because that's what we're like. That's why they call us consumers, because we're like fucking termites. We just consume loads of shit that we don't need because some fucking advert on a TV or YouTube has told you, oh, this is fucking great, you should buy it, and you go away and you fucking buy it because it's very clever marketing, right? That's why we're called consumers, because we are fucking termites on the planet. So when unemployment is high, one, it means more people are out of work. Now, you have to look at the snowball effect of that. If more people are out of work, why is that negative for the economy? Well, it means most people, loads of people, are potentially going to default on paying their mortgage. They're going to default on paying their fucking ticked Land Rover sitting in the driveway. They're going to default on paying their Sky TV bill. They're going to default on paying their mobile phone bill. They're going to default on paying their fucking credit card bill. So as they're all defaulting and getting into more debt, all these companies that gave them the tick are getting into more fucking debt themselves. And it's just this massive fucking snowball effect of bearishness, okay? Negativity in the market. So that's why it's not good, okay? Very logical when you think about it, right? It's not, you don't need a master's degree from the fucking London School of Economics to really understand this. You can make it very fucking simple. CPI year on year. We want to see that. Okay, so it's forecast to be less, a little bit higher. So yeah, what did I have pound at last week? Was it weak or neutral? Yeah, neutral. I'm gonna keep it at neutral, guys. I'm gonna keep it at neutral. Now remember, like I said, guys, you might look at pound this week and it's like, oh, you said it's neutral and pound's flying. You need the context, right? I'm talking about the overall state of the economy. I'm not talking about a couple of 1 hour candle movements, you know. I'm talking about the whole big fucking picture here. Because I am a long-term trader, right? Sorry, too much. I'm a long-term trader. What are we on now? Japanese yen. This will be pretty quick, and then we are finished, guys. Give me 10 minutes, we'll be finished. Japanese yen, we already know shit. Let's have a look. Average cash earnings has increased. Now, this is actually a tactic from the Japanese government, right? The Japanese economy is fucked. It's totally fucked. It's really, really shit. So what the Japanese economy done back in November was they massively increased everyone's salaries, right? They gave them really big salaries. Why? Because they know what I just explained. When people get even more money, they're going to fucking go out and spend the shit out of it. Oh man, I've got so much money this month. I'm going to go out and go to restaurants and this, that, the other. That's what they do. That's a kind of tactic that governments and banks use to stimulate the economy if their economy is really bad, okay? And that's exactly what worked. And then, when they toned it down a little bit, kind of December, January, the economy just fucking collapsed again. It's like, oh, okay, the kickstart didn't really work, so we're going to have to increase the average earnings again, which is what they've just done. They've increased it from 1.8 to 3.1. That's fucking fantastic. It's not enough to mean that the Japanese economy is fantastic, but it's enough to start, you know, it's like jump starting. It's like, if you got a motorbike and you're fucking kickstart, it won't start with a button. And you're trying to fucking kickstart the bike, you know, and eventually it starts ticking over. Well, that's what the government are doing by giving people more wages, right? They're trying to kickstart a fucking economy. They're trying to get people to spend more money and start to boost it, okay? That's the point in increasing people's earnings. Leading indicators, yeah. Current account's higher. I mean, we don't really care about it, but it's nice to see. So if the current account has grown, what does that tell you? That means far more people have been spending more money in the country. If they've been spending more money in the country, it means the current account gets fucking bigger, which means, tells you, what does that mean? That means there's been economic growth, economic stimulus, you know. Economy Watcher sentiment 45.1. Shit, remember, anything below 50, negative. Bearish. Anything above 50 is bullish. Consumer confidence is low. Tool orders has increased. That's good. Bank lending has decreased. That's not good. If we want bank lending to increase, and it's the same idea. If the banks are lending more money to people, what does that mean? If you're getting money from the bank, a bank loan, you're getting a bank loan because you want to fucking do something with it, right? You're gonna buy a car, you're gonna buy a fucking boat, you're gonna get decking at your granny's fucking house and all that, you know. So you're gonna stimulate the economy, okay? So when bank lending is down, that's negative because people, the bank are giving people less money. And so that means people are spending less money, okay? Very fucking simple stuff, lads. PPI year on year has increased. PPI is like the CPI. PPI is basically for like companies, it's like factories. So let's say I'm a factory that makes this fucking metal handle and microphone and shit, right? PPI is the price that it costs me to buy these raw materials, right? If the price of these raw materials goes up, which it has here, right? If the price of the raw materials goes up, that's going to eat into the company's profits, right? Well, in theory, yes, but companies won't allow that. So what they do is they pass that extra cost onto the retail price, the retail cost. So when you go to buy it, it's going to be more expensive. So they put that cost, that extra charge that they've had of the increase onto the consumer at the end of the fucking table, right? So what does that tell you? It means potentially the next time we see CPI, Consumer Price Index, then that is going to slightly increase because this is already increased. So this will increase first and then CPI will potentially increase, okay? So by monitoring PPI, you can guess, or you can judge. Look, there you go. National core CPI year on year. What did I just tell you? It's previously 3. They're now forecasting it to be 3.2. I just fucking told you. Why? Because if we look at it previously, PPI has gone up. If PPI goes up, I already know in my mind, next time CPI comes in, it's probably going to be higher, which is bullish, right? Revised industrial production month on month, cash restraining orders. Yeah, it's all pretty shit. You know, Japan is. Yeah, I mean, I'm putting it in neutral. So the reason why I'm right. Let me explain Japan just now. Overall, right now, the Japanese economy is really fucking dog shit in my opinion. I mean, I'm being very generous putting it in neutral, right? To be honest, I really put it in weak. However, if you look at Japanese pair right now, let's just say fucking UJ, right? USD Japanese yen, you might see that UJ is fucking melting, coming down, which means, in theory, USD weak, Japanese yen strong, right? Now, if you look at the two economies in terms of numbers like this, the US economy right now blows the Japanese economy out of the fucking water. You would never in a million fucking years buy the Japanese yen over the USD, right? It'd be fucking mental. However, if you look at the charts right now, you will see USD Japanese yen is fucking melting, coming down, which means USD weak, Japanese yen strong. If the Japanese economy is clearly not fucking strong, and the USD is strong right now, why is USD Japanese yen going fucking bearish? If you've listened to this fucking video, you will know the answer. Risk sentiment. It's the sentiment of the market. Right now, we are in what? We are in a period of risk off, which means people do not want to be risking their money in the US economy right now, so they put it where? Into safe havens. What's a safe haven asset? NZD, Japanese yen, Swiss franc, gold, silver, and so on. Alright? If you look at Swiss franc right now, it's fucking melting. As in, it's not melting, sorry, I mean it's going strong. So USD CHF is fucking melting, which means strong Swiss franc. Now, if you look at the Swiss economy compared to the American blows out the water. It's because we're in a period of risk off sentiment just now. Alright? So you're starting to see, even just in this video that I've done, you can see where the fundamentals can tell you where the market's fucking going, right? And how much of an important tool this really is. It's fucking fantastic. And you can see how fluent I am at reading this off, right? Honest to God, guys, if you spent every Sunday doing this on your fucking charts by yourself, you will fucking be just as fluent as me in, I'd say, 4 to 6 weeks. I swear to God, I'm telling you, I'm not bullshitting you. You will. For the first 2-3 weeks, you'll be like, fuck, this is hard, and then it just clicks. By the time you've done it a 4th week, you're like, I fucking get it now. I fucking get it. Alright? So, we're moving on to the last pair, guys. Couple more minutes. USD, okay? So, Japanese yen is weak. Last week, what we got? You don't need to. You also don't need to care about every single fucking news thing, right? There's only certain ones we care about: CPI, PPI, PMI, PPE, manufacturing services, GDP, employment, unemployment, average earnings. You know, we don't care about all this shit. You know, we don't care about all this. So consumer credit, that's month on month, okay? Month on month is okay. It just tells us what the markets are like right now. The ones that we really care about, though, are, as you know, being long-term traders, long duration traders, is quarter on quarter and really year on year. Okay, so that's bearish, bearish. It's actually the same. It hasn't moved, so it's neither bearish nor bullish. It's just static. Crude oil, we don't care. Bearish, bearish. Bearish, bearish. Bullish, actually, because it's increased. Still minus, but it was at minus 307 billion. It was minus 60, so it's actually bearish. Bullish, bearish, bearish, bullish, but it's taken a massive jump down, so that's not good. And yeah, not good. Bearish. So it's actually USD is massively, bearish on these fronts. However, as an economy as a whole, it's actually still very fucking bullish. So we've got a week here of really bad numbers, right? But you don't just change it on that just because it's a bad week, okay? You look at the overall, and when you look at the overall here, it's actually really fucking good. Still really decent numbers here. So I'm still gonna keep the USD as my only strong economy for now. However, when I say that, I could be putting it into neutral, but I'm not. I'm still going to keep it as strong. We will see. What's next week got coming up for us? We've got core retail sales, unemployment claims. Yeah, let's see what next week brings, okay? And we'll kind of take it from there. But just because it's in 1 week of bad news, I'm still keeping it in strong. It is still, overall, it's still a very strong economy. We have to bear in mind tariffs, this, that, the other, all has effects on the market. Tariffs are really just a way for Trump to kind of make this free money to pay off the 36 trillion debt payment that they had without having to eat into the country's own funds. And it's really just to bring everyone else around the world to the negotiating table and be like, look, why the fuck is the United States funding all you fucking Klingon cunts, Like, it's about time you fuckers started paying us what we're due, which is quite right, because all the other countries around the world do take the piss out of the United States. Countries around the world, we all like to think that we're strong and independent. The US economy funds loads of us. It keeps loads of us off the fucking poverty line, I'm telling you. So the whole world relies on the US economy, alright? We don't like to believe that we do, but we fucking do. So that is pretty much it, guys. Just to round up, it hasn't changed since last week. USD strong. Yes, I know it's bad news, though, but overall it's still the strongest economy. Weak NZD, Euro, neutral, AUD, CAD, CHF, GBP, Japanese yen. If Japanese yen and CAD come in weak next week again, that's been enough weeks coming in weak that I can then move it across to weak from neutral, okay? But also, when it comes to Japanese yen, before you move it across to weak, you have to take into consideration, are the markets now back into risk on, which would be yes, it would show more weakness, or are they still risk off, which would show strength, which would mean I would keep it in neutral at that point. Okay, so there's many aspects. Like I said, guys, jump across to our YouTube channel. It's called The Trading Guys, and you see it says TM just because like trademark, but it says The Trading Guys. It's the one where I post all these videos. Hit subscribe, hit the little alarm button for notifications, because I'm going to be doing tons of live lessons. And not only that, whenever a trade comes up, I'm going to be doing live trading on there. If you don't have that little alarm bell set, you're maybe going to see that I have been on a live fucking 2 days later. You know what I mean? So it's going to be pointless. And you can interact with me, you can ask me questions, blah blah blah. Now, to keep things fair, because I do have a Discord group for like paid mentorship, paid education, predominantly what I'm going to be doing on the YouTube stuff and all the free content I'm pumping out is really just giving information. I'm not really going to be sharing tons of knowledge. I will drop a couple of knowledge bombs and help you learn, but it's not fair on me to have paying guys that are paying for mentorship in the group and blah blah blah, along with my partner Lee, and then giving the same shit out for free on YouTube. It doesn't make any sense. So I'm sorry for you guys if you're not paying. You're going to learn loads, but I'm going to be giving away information on there. I'm not necessarily going to be giving away fucking tons of knowledge, and there is a difference, right? So that being said, I hope you've enjoyed this video. I hope I'm someone who can finally make fundamentals easy for you to learn, because for years I was trying to learn it and the people teaching it were just fucking geeks. They were proper fucking university geeks, and they were like, oh well, and they were just going off on tangents and stuff. They were going too in depth, they were speaking too fucking geeky, and they were just making it to the point where it was all as if you were really learning macro and microeconomics at a university, and I'm just like, who the fuck's gonna learn this? If you're an average guy, you went to normal school, weren't particularly academic or blah blah blah, you're just a guy from the streets like me, but you want to fucking learn it. There's always a way to learn something. So I hope that I'm the guy for yous who've been in a position like me where you can't learn from all these fucking geeks and they overcomplicate things. I hope I can finally make this simple for you, easy to digest and a bit easier to watch. This is going to be my last video on a Sunday. From now on, it's going to be Mondays, and I'm going to be doing it in a beautiful fucking screen. You're going to see it, and hopefully that gives you more help as well. Okay? If there is anything that you're struggling with in trading and you have questions about, please bang it down in the comments, because if I see your comments, I might not just answer you directly. I might, in fact, actually take your comment or your question or something you're struggling with and you want me to explain it for you, and I may turn that into content so that everyone can see it. Okay? So the more questions you guys ask in the comments on YouTube, the more I will be able to pump out content which is actually going to help you, because then I can see what people are struggling with, and I can then actually create content to help you based on your questions, rather than me just fucking talking a lot of shit hoping that it's going to help someone. Okay? So thank you for watching, guys. I'm Ryan Mack. This is the Trading Guys. Have a great week. Don't over risk, don't over trade, and I'll see you soon.